My name is Gabrielle Goldplank. I am the co-market leader of CannaGather, New Jersey. And along with my co-market leader, Kirsten Risco, we've put together an exciting and very informative panel for you guys. So we're very excited to get started. So let me introduce our panel and moderator. We have Marc Press, Esquire of Cole Schotz. Him and his team are oh, Schotz. Schotz, I'm sorry. Cole Schotz. They're a longtime supporter of CannaGather New Jersey, and him and his team are a lover of the cannabis and the plant, and he deals with clients in all sorts of cannabis related industry. And we also have Harry from Citrin Cooperman, who also helps a lot of cannabis clients from the accounting and from business strategy, everything.
And he really bought his fan club.
Yes, and we also have David Cunic, who he's a consultant and leadership consultant in the cannabis industry. He has been helping out clients for a number of years, and he's excited to give his thoughts on our theme, which is all about funding, compliance, and taxation when it comes to cannabis. We're also going to have Marc at the end just give us a little update about what's going on with the RFA in New Jersey. It seems to be changing every second, so we'll give you an update on that as well. So Jen is also our moderator. She's the president of Jenna Communications. She's a PR specialist in Philadelphia and New Jersey and heading up to New York. So she's excited to meet everyone here and just help out anyone in need of PR when it comes to this industry. So Jen, take it away.
Thank you so much. Thanks for having me tonight. If you guys have any questions throughout this, just raise your hand because we have a lot of questions to go through and we want to make sure that all of your questions are answered since you're here to learn about your new business. So money in cannabis is complicated. When it comes to funding, taxation, and compliance, there are obstacles not typical to a small business startup. So we're here today to properly talk about those challenges, solutions, and advise you. So we'll hop right into it. We're going to start with Marc. Can you explain the legal and financial difference between a strictly cannabis-based business and one with CBD offerings?
Sure. So if you're I'll refer to it as a THC business, which is always going to be, whether it's in New Jersey or other states, it's going to be a licensed entity, and you're not, as a legal matter, able to sell it on a state basis. I think we all understand that it still remains unlawful at a federal level. CBD, on the other hand, has been removed from the Controlled Substances Act. It's no longer a Schedule I substance. So it's not unlawful at a federal level in the sense that it's not subject to prosecution under the Controlled Substances Act as any other Schedule I drug might be, heroin, amphetamines, etc. Having said that, the FDA has spent a lot of time recently, and they've recently had hearings on how to regulate CBD. But having said that, I think you all know that there's quite a few companies that on a regular basis are selling CBD, whether it's online, in wellness centers. And while if you ask me, is it lawful, I can tell you how you might do it in such a way that you're not likely to be subject to any kind of prosecution. So the shorter answer is, if you have a licensed business and you're selling in accordance with state law, you're in good shape. If you're also selling at the same time CBD products and you keep them intrastate in your state and you're not distributing them out of state, then you're probably good too. But if you're selling them online, out of state, there are some elements of it which you have to look at more carefully in terms of what you can say about your products, what you shouldn't say about your products. So, and this is all shifting. It's all changing somewhat rapidly, and there's a lot of uncertainty on the CBD side, less so, frankly, on the THC side.
So how can you expand your CBD business as the laws change?
Well, I think there's a lot of competition out there. There's a plethora of these businesses. They pop up on a regular basis. And so branding at the end of the day, and it's not different than what we're seeing in for THC businesses is important. So you want to build out your brand. You want to get brand recognition so you can move it across state lines when you can move it across state lines in a manner which at least is FDA from a compliance standpoint. Having said that, there are brands out there that regularly do this, but it is a branding. And the other thing is, you also from a standpoint of what you're selling, you need to be able to back up what you're selling. So if you're saying you're selling a tincture that has 750 milligrams of CBD in it or hemp-derived extracts, you need to be able to show that it really is, because there's a lot of companies out there that necessarily can't do that. So getting the proper testing and so forth and certifications are all important in that sense.
Okay, and this may be for Harry. How does this change their filings, and how important will specifics of payroll and accounting come into play?
How does it change their filing?
Yes. How does this change their filings with the new laws with the CBD business?
Oh, okay. Got it. Okay, testing. So first of all, excuse me, thank you for having me. Harry Carpenter. I am a partner with Citrin Cooperman, and I've run the cannabis practice here in New Jersey for the firm. Big change, actually. CBD, for example, was a Schedule I drug up until officially the Farm Bill was released December 2018. I think up until that point, it was a gray area. I think now, the reason you're somewhat seeing the floodgates open with so many different CBD businesses is because you're no longer subject to this term in accounting called Section 280E of the IRS tax code. So there might be a question later on that, and I could expand a little bit more. But it absolutely has changed, and for the better. So now that you're not Schedule I, you're able to take a lot of deductions and get a lot more benefit on your tax return than you were before the laws has changed. And I do think on the adult use side, it's all moving in that direction, but we're just not there yet.
Thank you. Harry, you're up. So obtaining a small business loan for a cannabis-based business is complicated and sometimes impossible for people. What advice have you given in the past when a client comes to asking for loan advice for their cannabis company?
I say talk to Dr. David Cunic. No, in all honesty.
So many people know who these two people are. My name is Dr. David Cunic. I'm the CEO and co-founder of UCS Advisors and Investor Relations. I've been involved in cannabis before Instagram was even around. That's right. I've been involved in cannabis since Instagram was even around. I've started 7 cannabis companies in 5 different states. I've raised over $20 million for my own companies, and I've helped other companies raise over $60 million. We've worked with some other companies such as Flower Power Coffee, other events companies like this. We've worked with Extraction Labs. We've worked with companies like Medicine Man Technologies, Evo Labs, C-Pill Labs, Canna Investor Magazine. If anyone's here looking for money, I'm sure every one of you subscribe to Canna Investor Magazine, correct? Raise your hand if you right now subscribe to that magazine. If you need money and you're not subscribed to that, you're losing out on a whole lot of money. So to answer the question, how's it tough to get a bank loan? Let's just call a spade a spade. If you need less than $500,000, you don't need a bank loan. It's called friends and family. What is your term sheet? What is your return on investment? Do you have your pitch deck ready? Who here needs money? Raise their hand. Right now, just raise your hand if you need money for your company. All right, do all of you have your term sheet here with you? All right, do all of you have a copy of an NDA ready to go? All right, good, because you should. In reality, this is kind of what we do, is that we really prepare companies where if you need less than $500,000, it's very easy to get. You have the power of LinkedIn, you have the power of social media, and literally the key is this. Failure to plan is planning to fail. So you need to have everything put together in harmony. And then once you have that, you can go out and ask for the money very easily. I'll tell you right now, there are several people in this room who are investors, who've actually already invested in this industry. You never know who you're going to run into. So less than $500,000, don't worry about banks. You need more than $500,000. At the end of the day, make sure you have a proper pro forma for at least 2 to 3 years. Make sure you have a proper pitch deck reviewed. And then you can really start going to venture capitalists, to other high net worth individuals, and so forth and so on. The banks will eventually get there. And if you need a bank loan, who here currently already owns a business not in cannabis? Raise their hand. Good. Go get a bank loan now for that other company. And then you can sit here, then take a second company and roll it into it. And that's a very easy way to get a bank loan. Or start developing your company right now and start getting business credit. Your company doesn't have to be in cannabis right now, but start developing business credit. You can go get a quick $30,000 to $40,000 line of credit for a different business not involved in cannabis yet. Keyword being yet. Then later on down the road, you can roll your company, whether it's CBD or cannabis related, into that parent company. Very easy way to get money. Kind of long-winded answer, but.
Yeah, I mean, just to echo what David was saying, it's not a bankable business where we are today. With some exceptions. But there are banks that are banking the industry. They're state chartered. You can make deposits and so forth. But they're not going to lend you money. Federal regulations are such that we're not there. Hopefully that will change. There are some statutes pending in Congress. Hopefully they get passed. And so you can put all these companies on at least on somewhat equal footing to non-cannabis companies. But early stage, to echo what David said, friends and family, you don't need a lot of initial startup capital. And by that, at least in my world, it may still seem like a lot of money. A couple of $100,000, less than 500. That's where you look to your funding. You're not going to find it at a bank, unfortunately, but it's out there.
And the only last thing I'd add to that is it's interesting that Marc said with exception. I do have a relationship with a bank in New Jersey and New York that is openly willing to work in cannabis. They're one of the very few, and they are starting discussions of lending in the industry. Starting discussions. They're not there yet, but they are openly taking cannabis deposits, and not a lot of people are doing it, and they're going to get there soon. But the advice these fellows gave is right on point.
And this one's for all of you. What kind of technology platforms do you recommend your clients to help them stay on track from a compliance, taxation, and legal perspective?
So I'm going to give the most basic, politically correct answer there is, because it's the reality of it. If you're in the state of Nevada, the state tells you what system you're using. Colorado, they used to tell you what system you use. Now have a few options. Oregon, there's a dispensary owner here. There's a dispensary owner from Oregon here tonight, and he'll tell you the first couple of years he was forced to what system he had to use. So in reality, the states are already kind of there, and that's why you see some of these technology companies coming out, such as BrightMap, such as TagLeaf, where they're saying, "Great, hold on, maybe we need a better option or some other options, instead of only having 2 or 3."
Yeah. No, the problem is that the industry is. If there are 50 states, you could have 50 different regulatory systems, 50 different requirements, 50 different software suites to track your sales, your accounting, your testing. All of these things can be different. So until somebody comes up with a magic bullet that somehow can work across multiple states, or frankly, that you do have some true federal regulations that permit you to operate across state lines and you get the synergies of that, I think we're kind of stuck with that type of structure.
And at the very least, you want a system. You know, Neil and I could tell you about clients that, you know, the bunch of pieces of paper in a folder is not a system. And we see it often. But the reality is, talking about compliance, I'll talk from the tax and accounting standpoint, you need to have a good books and records. There's certain business lines that you can deduct certain expenses. There's some that you can't. If you commingle your businesses, you're going to get disallowed all your expenses. That's what the IRS is going to do. So you want to get that right up front. You want to get your chart of accounts right up front. You want to get the accounting right up front, because later on you're going to eventually file a tax return. And if you're working in cannabis, you're likely to get audited. And you want to get that right up front from the beginning.
And to make things even more simplistic, when I ask people here who currently owns their own business, less than 1/10 of you raise your hand. So I'm going to kind of assume that maybe 9/10 of you in here have never owned a business before. And one of the best general rule of thumbs we tell all our advisory clients is treat this like any other business. You're going to need payroll. You're going to need accounting. You're going to need a proper business attorney. Whether it's cannabis, CBD, a pizzeria, a barbershop, whatever, you're going to need this basic stuff. So kind of treat it like a basic business as well, too.
For your own clientele and for the services you provide to cannabis and CBD companies, what's the most common piece of advice that you all find yourself saying?
Okay. You need to make sure that you structure your company properly, and much of that is dependent upon what your company is going to be doing. You need to talk to whether it's Harry or another accounting firm that understands how you need to segregate what you do so you can deduct as much of your expenses as possible. You need to talk to a business attorney who says, okay, if I'm going for a cultivation license and I've got to buy a piece of real estate, I buy that in the same company that holds a license? The answer is no. On the cultivation side, how do I make sure at least I can get as much benefit for deducting what I can deduct under Section 280E? So you need to understand all of that up front, because if you make a mistake early, you may not be able to rectify it. And that's the kind of problem we've seen.
Before David, aside from the record keeping, I give a really basic piece of advice because I absolutely see it way more often in this industry than in other ones. It's put it on paper. You know how many handshake agreements are out there and giving equity and side deal and, but it's not on paper. And then, I had a client that formed a company and the CEO formed the company and registered in his name using the last name of his partner. And they never had a formal agreement, and they had a huge falling out because they both were on the wrong side of the page. Well, guess what? Come to an agreement, involve your accountant and your attorney and your consultant, and guess what? You'll all be on the same page and you'll be prosperous. But you start doing handshakes, and I thought you meant this, and I thought you said that. It's very basic advice, but it happens all the time in this industry, and don't let it happen to you.
Some of you have heard me speak before, and I give something called the green nuggets of information. So I'm going to give everyone 3 green nuggets right now. Number 1, failure to plan is planning to fail. And I'll say it again. Failure to plan is planning to fail. It's the most simplistic advice out there, and I see more people in this industry who have the next secret sauce, an amazing idea. Then I say, great, back it up and show it to me now. And they can't. The second thing is this. If you're serious about this industry, it's going to cost you money. It's going to cost you money to have an accountant. It's going to cost you money to have a lawyer. All right? It's going to, literally, you could have an idea. An investor might say, great, I'll write you a check for 50 grand right now. So have your lawyer send me over the paperwork. And I've seen people say, oh, I don't have a business attorney yet. Well, why not? So at the end of the day, it's going to cost you money. All right, and be prepared to spend money in this industry. And the third piece of advice is, if you've never owned a business before, get a business advisor or a business coach or a business mentor. Before I took my company public, I had a great mentor for about 12 years. I'm very thankful to this day that I spent the money, I took the time to get a proper advisor and mentor to teach me stuff I didn't know, so it wouldn't cost me millions of dollars down the road.
What do each of you think are the biggest liabilities having a business in this industry?
I wrote down some of my answers ahead of time. Really, it goes to these 2 gentlemen right here. Lack of protection. That's what I see most in this industry. People that don't have a proper lawyer ahead of time and a proper accountant. I see that it's really too late for them. I see companies that they start taking in money and they start banking and they're doing it the wrong way. Then they're running into issues legally and also running into issues financially. And the second part is that too many people in this industry keep their blinders on. It's just business, people. Cannabis can be an adjective, CBD can be an adjective. You are a CBD company, you are a cannabis company. Still, you're a company, it's business. So take off those blinders, business is business, and make sure you have the right lawyer and the right accountant. I cannot stress that enough.
Yeah, as a lawyer, I'm trying to help you avoid risk, and so, I come to this with a more cynical attitude or pessimistic view of the rest of the world and what people are like sometimes. But what you do find out is, and we've talked about this before, you don't sit down and talk about a deal with your erstwhile funding partner or whoever that might be and say, yes, for X, I'll give you Y. This is the percentage of the company. It's going to bite you at the end of the day, because unless you have it in writing, as Harry said, and you have these worked out ahead of time, somewhere down the line, it's going to be a problem. And of course, it only becomes a problem when you're successful. If the company's worth zero, nobody cares. If the company's worth $1 million, people care a lot. And the cost of litigation and to settle that kind of stuff can be very significant. And you can lose much of what you spent your hard efforts and sweat and equity trying to build.
I might sound redundant, but I'm back to the biggest liability for me is the paperwork. Lack of paperwork for agreements that were in place that weren't in writing, lack of paperwork supporting a potential IRS audit, defending the accounting, lack of paperwork to support how you're doing your inventory costing for your cost of goods sold, because that's very important in this industry, and you have to make sure you have the documentation and support. So in my mind, it's the lack of paperwork.
Thank you. Harry, what do business owners need to know about 280E?
Well, it's interesting because the more I talk about it, it's still a very confusing topic, and I know it's confusing because even in my accounting department in my firm, we interpret it and we talk through a lot of things. But in the grand scheme of things, 280E basically says if you're dealing in any industry that is illegal at the federal level, you are subject to Section 280E of the IRC. And what does that mean? That means that you're only allowed to deduct the cost of goods sold. Why is that? There was a case many years ago where, it's a long story, my staff tells it very well, where there was a drug dealer and he made the argument that he's able to deduct his cost of goods sold. And it became, the Supreme Court announced that there's a constitutional right for you, even if you're dealing in something illegal, to deduct your cost of goods sold. But there's no constitutional right to deduct any other expense. So if you know anything about inventory costing, it's a little bit challenging. It's not just purchasing a product, it's the effort put in to make that product. It could be an employee putting the product together and things like that. So what do I tell people? You actually want to be as aggressive and as least aggressive as possible. You want to be as aggressive as possible and putting as many costs as possible into your inventory costing so you can deduct that cost of goods sold. And you want to be as least aggressive as possible, because if you're working in cannabis, you're almost definitely going to be audited. And that's exactly what they're going to be looking at. So it's a really fine line to get there. That's why you need somebody like our team. But in the grand scheme of things, your operational expenses are not deducted. What does that mean? You're paying tax at the federal level on gross profit, not net income.
And how do you advise clients to report their sales figures?
Correctly.
What kind of fines and penalties do you advise your clients to be aware of? And how costly can these fines and penalties be if not avoided?
No, right. No, I mean, that's the thing. You don't want the IRS eyeballs on you. Like once they have you on you and they ask a question, we have to defend that, and hopefully we've done everything we possibly can to defend that. But what are the fines and penalties? I could tell you right now, I've seen very aggressive tax returns where they kind of ignore 280E. Okay, well, you ignore 280E. Because your state thinks it's legal, it doesn't matter. Federal says it's not illegal. The government's going to come back and they're going to reassess that tax. And by the way, the IRS comes in very often 3 years later. They're going to come back and say, you only paid on $100,000 of taxable income. Really should have been $500,000 of taxable income. And I'm going to charge you fines and penalties. And on top of that, I'm going to accrue interest from the day that you owed me that money. And all of a sudden, IRS is going to say, oh, by the way, you got to pay me within 30 to 60 days or I'm going to put a lien on your property. And that tax payment is a lot of money. And you weren't ready for it. And from a cash flow standpoint, it will absolutely kill you.
Marc, how can a business structure themselves?
Before that, can I just sort of address?
Yes, of course.
I mean, right now, I think as most of you know, recreational marijuana has not been approved in the state. So we're looking at a medical industry. And so wellness centers, for example, you could have two different businesses. You can have the side of the business which provides counseling and helps determine what's the appropriate treatment for a particular ailment you may have. The expense of that is deductible. On the other hand, the expense under 280E of selling the product at the dispensary level is not. So there are things you can do, and that's where somebody like Harry comes in, can help you with that, and you may want to set up separate entities through which you run these businesses. So there are some options. You want to try to do everything you can to be able to deduct without going over the line, being so aggressive that you're going to lose in an audit, to be able to at least get your business to a point where you're as close as you can to a non-cannabis business. It's difficult. Unfortunately, the industry is too highly taxed, and it's a real drag, but there are ways to mitigate those issues if you pay attention and have the right advisors.
How can a business structure themselves properly to protect themselves?
Well, what I was just talking about is kind of along those lines. So, for example, if you own the real estate in which you operate, your interest on your loans, your real estate taxes, and so forth should otherwise be deductible. On the other hand, the licensee who's cultivating there, you've got to be careful about what you can deduct. Yes, that's all part of goods sold. But then when you move over to the dispensary, now you're incurring operating expenses and so forth in connection with, at a federal level, it's unlawful. And therefore, you can't deduct them, thanks to what was a relatively low-level drug dealer who left us with 280E. But anyway, so those are the sort of things, and you have to pre-plan. You have to keep good records. Harry's been beating on that, since we got up here.
Let me just add one more thing real quick. So in regards to the structuring, I mean, that's a good question, right? So there's been many times where our clients come to us after they've structured their company, and they say, you know what, I structured myself as an LLC, but I was told I should really be a C Corp, and I'm not sure. And we hear this all the time. The best thing to do is, before you finalize that operating agreement, you have a conversation with your accountant and with your attorney, so we understand what the intent is, because it's the typical answer, it depends. There's no bright line that says you should be an LLC or an S Corp or a C Corp. It depends on how long you plan to keep the money in it, what you're contributing, when you're going to pull it out, what's your exit strategy. So those are really where Citrin Cooperman's advisory services come in. We're not going to write your agreement. We're not attorneys. That's where Marc's team comes in. But we work with Marc, and we talk to each other, and we collaborate to say, okay, their intent is this. They want to add future partners later, and how is that going to impact their structure? And it's really talking it out and things like that. So whether you've done that point so far or not, it's a discussion. There's no direct answer.
Green nugget number 1. Failure to plan is planning to fail. When you start a company, what's your goal? Do you want to sell it? Do you want to give it to your family? Do you want to be acquired? Then you sit down with someone like Marc here and say, Marc, should I be an LLC, a C Corp, an S Corp? And real quick, just for the audience, which I think is really important, can you go over just a quick difference between the C Corp, S Corp, and LLC? A little free advice here. Come on.
Right. No. So a C Corp is a corporation. It pays taxes. An LLC is what's referred to as a pass-through entity. The entity itself doesn't pay taxes. Its owners pay taxes. So if the LLC makes $10 and it's got 2 owners, each has $5 of income, they pay taxes on $5. The corporation earns $10, the corporation pays taxes on the $10. An S Corp is, from a tax standpoint, works very much like an S Corp. And for lawyers, they refer to them as pass-throughs, limited partnerships. Partnerships are pass-throughs also. Now, things changed with the Tax Act of 1917. Am I a year behind? Yeah.
I don't go back.
Yeah. No. So it used to be that you had a graduated corporate tax rate as high as 42%. Now there's a flat rate of 21%. So if you asked me 3 years ago what you should be, I'd say you want to be an LLC. I'm not going to get into the questions of liabilities and all of that stuff, but on a net tax basis, that worked best for you because you only had one level of tax. It all passed through, the losses passed through, and you paid tax at your individual rate, whatever that might be. All of your members in that company. Now the flat rate is 21%, so it's a more difficult decision. You have to look at what your projected cash flows are, because at the end of the day, if you're retaining the earnings in the company, then maybe a C Corp makes sense, because as I said before, it doesn't matter with an LLC. You make $100, but you need $100 to go out and buy more inventory. The members of that LLC still pay taxes on that $100. The C Corp wouldn't pay taxes because they're going to spend it and get to deduct it. So you have to go through that careful analysis to make a decision that makes the most sense for your company.
And I mean, there's also some nuances. You know, there's some rules for an S Corp where executives are supposed to be paid normal compensation. So if you own the company and you're an S Corp and you want to pay yourself excessively, or you want to pay yourself zero, okay, then those are things that could possibly, you know, get you in trouble down the line. There is more flexibility in an LLC. You could actually have differences in equity contributions and ownership, and also the distribution of profits and losses. But it really depends. I mean, Marc really laid it out perfectly. That change in that tax law 2 years ago, bringing that tax rate on the corporate side to 21, really did make everybody rethink, well, what really is the best? Because before that, there was a high tax rate and you were double taxed as a C Corp. Most people tried to stay away from that if they didn't have to.
The other thing I'd want to add here is, it's very easy to, from a tax standpoint, when I say easy, there's no negative tax aspects from it for them, almost entirely, from saying I'm an LLC and you're an LLC for a year or two, and now it makes sense to become a C Corp. You can change your tax status. Going the other way is generally a disaster from a tax standpoint. So it's important you make the right choice from the beginning.
David, when it comes to credit card processing, can a company accept credit cards as soon as they're open for business?
Well, technically speaking, yes, if you get a merchant services account. That's his business. However, though, we're talking about cannabis or CBD, that can be a little bit tricky. So depending what state you're in, you can get some merchant services, but this is something I recommend to every startup company. If you're not even making 10 grand a month, you don't really need merchant services right away. You can build into it. Between the accountant here and the lawyer to the left of me, we all know the rules of merchant services is constantly changing. You know, for at one point you had, was it Elevon that allowed CBD, which was CBD merchant services, which it got over, I think it was 10,000 plus accounts in less than 8 weeks. And then it got shut down because it pissed off all the other merchant services processes. So at the end of the day, if you're really worried about merchant services right off the bat, don't waste all your time on it. That shouldn't be even on your top 3 or top 4 priority list, in my opinion.
And this holds true for CBD companies as well?
Reiterating what was just mentioned before, at the end of the day, each state's a little bit different. You know, that's why you have a great lawyer to look into that for you. That's why you have a great accountant to look into that for you in each state. And that goes back to what I was saying, is that make sure you have the proper team set up for yourself. Because in reality too, if you are selling CBD, what kind of products are you selling? Are you selling interstate or intrastate? Are you just going from North Jersey to South Jersey? Are you now in the state of Maine or Massachusetts where you can't sell CBD edibles anymore, which now happened for the second time now so far this year? First time it happened, it got retracted in less than 45 days. So these are all kind of things to think about.
What about ancillary products like packaging? What kind of packaging, labeling, and product safety laws should we make sure that we abide to?
You know, well, you know, yeah. Again, it's on a state-by-state basis. Listen, the ancillary part of this industry, I don't think I can't quote numbers here, but it's probably more on a net revenue basis, I suspect. So you have companies that are providing packaging, they're providing regulatory assistance, they're providing products, vaping products, all of these things. Those sort of operate across state lines in that sense. There are no limitations to who they sell for. But on the other hand, the packaging will have certain requirements, different on a state-by-state basis. How it gets packaged, what the labels have to provide for. So you need to make sure where you're operating, you're in compliance with.
If you have a CBD company, make sure you get product liability insurance. And no offense to the lawyer, if you want to save a few nickels, call up your product liability insurance agent and say, hey, what kind of labeling do I need? And guess what? They're going to tell you because they're going to know. So, and they'll also will sit here and actually send over what they think you need to your lawyer for you. And the lawyer and your agent can talk together and make sure you're adhering to all policies. And also, too, if you're going to go into Canada or also international, there's also different rules and regulations for that as well, too.
Okay. And what are the costs if people don't abide by those laws?
Harry, you've got to help. Well, if we'll just talk about FDA for a moment. For example, let's just say the worst case is you're selling CBD online, and I think we've all heard about this. There were these companies that have made claims that they can cure whatever, multiple types of diseases. That's where the FDA, you're inviting a cease and desist letter. They'll shut you down in a moment, and you're out of business. So there's just the cost of that. If you don't, then you are subject to fines, and those can add up very quickly. So you need to understand what you're doing and what the likelihood of enforcement is against you. And so this is all going to change on the CBD side of things, hopefully within the next 3 to 6 months. At least I think that's the hopeful scenario we're looking for, given what Congress's intention is, but remains to be seen.
So real quick, I think that we started to hit on it, so kind of came up earlier. So the Department of Justice and the FDA is two different things. So the Farm Bill coming out effectively descheduled CBD as a Schedule I drug. So you'll see it all over. It's in Vitamin Shop. It's in CVS. But the FDA is kind of hanging out over on this side of the field, saying, and they're watching out. And just because it was descheduled by the Department of Justice doesn't mean that they're not looking out to make sure that your labels are not saying something that's not true. Maybe it is true, but has it been tested? Has there been clinical trials? And chances are there has not. So that's a big one. And I wanted to bring up one more thing related to 280E again. And I think it's kind of important for a lot of people in the room. 280E is only applicable if you are plant touching. So I know there's people in the room that are applying for a license. They're incurring costs, and you might be wondering, oh, if I'm applying for a license in marijuana, I must be subject to 280E. That's not the way the rules work. Okay, if you're making a vape device that does not include THC, you're not subject to it. If you're applying for a license, it's plant touching. Plant touching will include if you're warehousing it. You might not touch it. You might have a distribution center if we ever get to that point. And that's when you really want to ask the question to your attorney. But just want to be clear about that not everybody is necessarily subject to 280E at this point. However, you do want to have yourself set up and your books and records for anybody in here who's planning to be working in the industry, that you have it all set up and ready to go.
Just a question for you. So from a 280E standpoint, with a CBD company, are you comfortable with advising clients that it's not applicable since it's been descheduled?
Yes. No, it's a true story. We had a lot of discussions over this, and effectively, it was not descheduled, even though a lot of states were very comfortable with it, until that Farm Bill came out at the end of December. And we even had a lot of discussions, and a lot of attorneys weighed in on it. And basically, there's nothing in the Farm Bill that said it was retroactive. So as far as we're concerned, the very end of 2018, effective 1/1/19, you're definitely no longer subject to 280E if you're working in CBD.
Thank you. There are bills being discussed in legislature versus the memo for the RFA by the Department of Health. Marc, which direction do you see this going?
I have no idea. So those who have been watching this, I guess maybe less than a month ago, Governor Murphy, through the Department of Health, said, we're going to call for a request for applications July 1, 108 new licenses under the medical program. Everybody got very excited. all of our clients who don't have licenses, said, okay, what do we need to do? Where do we start? Everyone's a little different. You could have cultivation, processing, dispensing, and so forth. The legislature recently adopted, Murphy has signed it, an amendment to the medical, or the Compassionate Care Act, the medical marijuana program. Now we're talking about 24, 28. I always get it. I think it's a total of 24 new licenses. So it's a much smaller number. They pulled the request for applications that was up on the DOH website. That's gone. So we don't know if we're going to see something on July 1 or July 15th, and it's not entirely clear what they're going to be calling for. So again, this is an industry where the sands are always shifting under your feet, and tomorrow we could get some guidance on this, and I might be telling you something entirely different if I were sitting up here tomorrow night.
One more plug for us. It's all the reason you want to line up folks like the three of us, in all honesty, because it literally has changed. If anybody went through this last summer, what happened in the beginning of the summer to the end of the summer was like 100% 180. So what we're expecting, what we were told, is not what happened, and we all had to jump and react at the same time. And having advisors on your side really was helping the people and divide the winners and the losers.
Last question. How can a business in New Jersey set up for an RFA process?
So this might be the best politically correct answer, but I actually have not advised one of my clients in New Jersey to apply for an RFA. I've lost business over this because they weren't prepared. They didn't have the right lawyer in place, accountant in place, money in place. They were being cheap on their application writing as well too. And so really in general too, someone who started businesses in 5 other states other than New Jersey, I see a lot of opportunity where there's going to be a lot of people applying for this, and they might get licenses, but they're going to run out of money. They're going to need some external help. I also believe too, because we went from 108 to 24, realistically speaking, great, that's great, 12 more months, and I bet you there's going to be about 75 to 125 more licenses available. So it's not end all be all if you don't get this, and as I say, once again, failure to plan is planning to fail. Clients that I turned down that I would not help because I just didn't think they were ready, they spent a few $100,000 and didn't get a license. But right off the bat, so it's just kind of food for thought. These guys are going to kind of talk more in detail, but in general, if you don't feel you are ready right now to hand everything in, literally right now, like tonight, then don't go for this round, wait till the next round and prepare yourself.
Yeah, well, the license, we're assuming the licensing process, the RFPs, the applications are going to look much like what was done previously. But you have to touch, and the way it's scored, touch a lot of bases. What's your financing? Who are the people with the skills within your particular organization to provide the needed skills, whether it's cultivating, processing, dispensing, security aspects of it. All of these play in. What's your involvement with the community? How are you going to, what are you doing with respect to hiring? Are you a minority-owned business? Are you a women's-owned business? Do you have disabled veterans in your group? It's really about putting together a team, and that's how everybody approached this last round. At the end of the day, and I'm being somewhat cynical about this, the guys with the biggest balance sheets got the licenses. That's what New Jersey's tried to avoid when we've gone back to 24, depending upon what they're looking for. I'm not as optimistic as I was before that we're going to avoid that, so that more local businesses, folks with less availability to capital, can participate in this industry, which is it's been one of the driving forces here. But there's this tension that continues to play out in New Jersey.
And for everyone that is applying for this, and I tell this to people all the time, and thank you for bringing it up, experience. You have to have people on your team that have experience. If you never owned a business before, you've never opened up a cannabis business before, you're not an investor in cannabis or CBD, that hurts you on your application. A lot of these big players that got this last round, they had a lot of people with 10, 15, 20 years of experience. So make sure when you have your team, you're applying, you might have to go get that advisory board of people that have that cannabis experience. That the state will look at that, and that'll go a very, very long way. And on top of that, too, you have a lot of people coming from other states that have had medical laws. And here's a fun fact. The state of Maine just celebrated its 20th year anniversary of having medical marijuana laws. 20 years. Does everyone know that? 20 years. And some of these players that got the last round license, they made sure they got people from Maine on their application and on their board, and the state liked that.
And ask yourself, does the plan make sense? Do not go out and get a letter of intent for a leased property in a municipality that is not supporting the industry. I've actually seen that. So you got to take a step back and take a big picture. Do I have the right team? Do I have the right money? Do I have enough money? And do I have the right location? You know, and did I spend enough time putting this plan together? And, you know, on the one hand, I agree with Dr. David. On the other hand, I will say there's a benefit, I think, to submitting that application. I've seen applicants become very close and are able to identify those few holes in their application of where they need to improve, because like Dr. David said and Marc, there's going to be more rounds in the future. So on the one hand, it's kind of like you don't want to go in and drop the ball and have no chance. But if you're close, if you think you're close, give it a shot, because you might be able to say, okay, I've identified my holes and I know, and I'm going to be ahead of the next round. So, you know, you got to kind of weigh those options, and maybe that's, in those cases, that's when you ask your advisors.
And you bring up a really good point. So if you look at other states like Nevada, Oregon, where if you want to be a testing lab, you're not growing, you're not selling it, but you're a testing lab. Not too many people applied for a testing lab license. When you failed, the state said, hey, we want you to pass. We're going to spoon feed you and send someone over to help you fill out the rest of your application for you. So that's also food for thought too. So you bring up a good point where, hey, if you're going for maybe a non-traditional license other than a dispensary or a grow, you can apply. And if the state really needs you, they're going to sit here and say, hey, they're going to help you and they're going to walk you through that process.
Thank you. So now we're going to open it out to the audience. So if you guys have questions, just raise your hand and either speak up or maybe come up to the front of the room so the panelists can hear you.
I was wondering what you think about the state allocating licenses for micro businesses, if you see opportunity there.
Well, that was certainly a part of the recreational bill, and there are different tiers available under the medical bill, but that's certainly it's one of the aspects of it. And so, what's good about that, from my standpoint, it lets players enter the industry who don't have to spend nearly as much capital as they might otherwise. There's a big difference between having a 10,000, 30,000, or 60,000 square foot grow facility.
I mean, and then, you know, I guess there's nothing bad about it. I think that, you know, the big players in cannabis, the ones that gobbled up all the last round of ATC licenses in the state, you know, they're going to be not interested in the micro businesses. I think that, I mean, depends on how you're asking the question, but as far as I'm concerned, it could only be a benefit for small business here in New Jersey and related to this industry. Who's got a question? Erica? Who else?
Hi. There's been a few instances where people have sued the pharmaceutical industry when fatalities are involved and people abuse the drug of a pharmaceutical industry. And New Jersey has allowed people to sue multiple entities down the supply chain and a couple people have raised a red flag that this might be applicable to the cannabis industry. How do you guys see that applying to, similar instance in the cannabis industry, and how do you protect against that type of situation as far as the liability is concerned?
Great question, by the way, because it's coming. I'm telling you right now. Pretty soon you're going to see growers. They're going to have to meet certain soil standards. They're going to have their water tested. Right now, there is no OSHA really in cannabis, and that's going to be happening in the next 24 months. You're going to be seeing those type of rules and regulations, and it goes back to having product liability insurance. At the end of the day, you're seeing insurance brokers starting to open up now and actually cover different aspects. If we were to use hemp as an example, you now have companies like Bank of the West that will actually insure the actual crop, which is the first time in pretty much it's ever occurred. So the lawsuits are going to come. Just it is what it is. We love to sue in America. Sounds horrible to say that. But at the end of the day, that's what, once again, failure to plan is planning to fail. You have meet with your product liability, meet with your insurance agent, get your product liability. If you have to outsource who your manufacturer is, find out how they're insured, what protects them, what doesn't protect them. True story, I recently have a client that does a certain type of CBD pain pill for menstrual cramps for women. And they were outsourcing the manufacturing, and they never checked on the product liability that the manufacturer had, and the manufacturer wasn't going to put their insurance up for anything they made. That's a big no-no. So that's just going to lead to lawsuits. So just a little more due diligence. That's why we have great lawyers, and you can kind of go from there and talk to your agents.
It's really no different than any other business. If you had a provider of your products or whatever, you license, whatever it was, at least if you were properly advised, you would say, let me see your insurance. I want to be an additional insured on your policy so that you could make a claim against their policy if you get sued. Now, this is a new area. So this is beginning to emerge as to what insurance companies will do, what they won't do. But that's critical. And I think packaging is a big element of this. What do you say about your product? What does your package say about the product? Is it accurate? Is it truthful? If it's not, you're asking for trouble.
Do it again? Hi. Why is the Department of Health is after food and beverage industry but not the vape shops?
Well, the vape shops, they're just selling products that smoke tobacco. In theory, that's right. I mean, that's a flippant answer. I don't know if I have a perfect answer for that, but there are certain things they're focused on here, and there are vape shops all over the place, and they've only now, at least if you just walked around town, wherever you might be, where the word hemp is beginning to appear. Previously, you would not see that. They're selling various types of products that you can smoke, and it'll say it's for tobacco. So they're beginning to branch out now, and depending upon what happens in this state, which is different from other states, as to what you can or cannot do with respect to hemp products. Because New Jersey's, there's a certain irony here. There's nothing specific in New Jersey that says you can do this or you can't do it. So you're on firmer ground if you're licensed on the cannabis side, but it's somewhat unknown as to what anybody would really do on the hemp side. They will ultimately adopt some statutes and regulations. It's definitely being talked about.
We got time for one more. Anyone?
Thank you. Do you guys have any insight pertaining to brokerage accounts, whether it's a 401, IRA, individual joint account? Say someone's had these accounts for years and now they're looking to break into the industry by owning a more than a 5% ownership in a dispensary. I know that the clearing agents are having issues with this. So what does one person do with their IRAs that they've had for many years? Is it just held in limbo?
I mean, well, brokerage firms are sort of like accounting firms, and the majority of them are just not going to be there yet. So, held in limbo. Well, I mean, I guess my honest answer for that would be if that whoever's handling your investments or your accounts is not comfortable, either you move your account to someone that is, and if you can't find someone, you keep that money there, and the money that you're generating, the income from your cannabis business, we'll have to talk to David and Marc and myself, and we figure out the best way to park that money so you're still making money off of it, irrespective of your brokerage account and not being willing to work in it.
Yeah, well, of course, I'm a lawyer. I got to make it more complicated. So, no, I understand. No, I do understand. So, yeah, let's just say you have a 401k and it's at Fidelity. They will not let you invest in a cannabis company. Now, let's say you have a self-directed IRA and you have a custodian for it. And you say, my buddy here started a company, I want to invest $100,000 in it, and I happen to represent that company, and I've got a subscription agreement, and my subscription agreements always say with a self-directed IRA, you've got to have the custodian sign it. So the question becomes, will the custodian agree to this? These are all FINRA generally regulated companies, which means they have limitations on their ability to provide advice, if they're a registered RIA, on federally unlawful businesses. So they may not agree to it. I suspect there are probably self-directed IRA custodians who would sign off on it, because they really come in all shades. But if you're with one of the big financial companies, they're not going to let you do it.
And that actually happened to someone as of 3 weeks ago. I had a client that wanted to invest in a hemp deal, and they're with Fidelity. Guy calls me up and goes, I can't wire the money. Fidelity won't let me do it. I've been in Fidelity for X amount of years. Are you kidding me right now? And I'm like, well, it's hemp. I know it's hemp. It's completely illegal. What the hell's the problem? Blah, blah, blah. Guy ends up doing the wire a different way. But yeah, at the end of the day, the big banks, the big brokerage firms aren't going to do that. I mean, if you also look at the publicly traded companies, especially a lot of these micro-cap companies in cannabis, a lot of clearing firms aren't even clearing stock either. But, in the next 18 to 24 months, you can see a lot of changes in general. And you kind of hear a repeat theme up here, like, hey, in the next 6 to 12 months or next 18 to 24 months. And I think it's really important that you hear that because, as the youngins call it, FOMO, fear of missing out. At the end of the day, you're not going to miss out. Now, if you're going to sit on the sidelines for the next 5 years, yeah, you might miss out. But listen, if you're getting involved in this industry in the next 6 months, 12 months, 18 months, you're not going to miss out. There are going to be more opportunities. There's going to be a ton of opportunities. The real issue is make sure you're ready to strike when the opportunity is there.
All right, we'll get one more, then we'll get back to the after party.
So a lot of New Jersey towns have said they're pro-cannabis. Some of a ton have come out and said they're anti-cannabis, and a lot of them have remained silent. So what is the approach to the towns that are remaining silent as far as making them getting the comfort level up for them so that they feel comfortable having a store in their town or grow facility in their town, absent sponsoring the Little League team with pot shirts for the Little League guys or girls?
I mean, so for me personally, the silence would make me a little uncomfortable. So if your pursuit is a town or city who is staying silent and that's where all your eggs are and that's where you want to be, then you really need to get to know the decision makers in town. And I mean, it's as simple as that. I would feel more comfortable in a city or municipality that is openly proud to be a part of the industry. Jersey City is a wonderful example. You see the mayor of Jersey City literally on the news talking about how he supports the industry. If you go and you get a letter of intent for a dispensary in Jersey City and you apply, you could feel relatively comfortable that the rug's not going to get pulled out from underneath you because the local officials decided that they don't want to be in it. Silence is, to me, I would be a little bit afraid of it, but if you want to overcome that, you need to really get to know the politicians and the decision makers and understand from them, and that's not an easy thing to do. You have to obviously know the people in town.
One of the aspects of the application is going to be site control for wherever you're going to be conducting your cannabis business. And my partner, Rob DePisa, the last round, spent a lot of his time crisscrossing the state, talking to mayors, talking to town councils, where they were receptive and trying to, because you needed a letter of support. There were towns where you simply, the answer is no, they're not going to change. There are ones who are the mayor's for, the council isn't, but the mayor assures that once you get it, the council will approve it, zone it properly. What you can't do, you can't sign a letter of intent without knowing that's going to play, that you're going to be able to cite your business there. So you need to look at it carefully, and depending upon where you are, you're going to get different answers. But it's important to focus on that right up front. That has to be one of the first things you do.
Networking. LinkedIn. And one thing that I always find interesting is that in Colorado, where we were just outside Denver, and I won't say which town, but some town council person came to us and said, hey, you know what? Where were you 2 years ago? What, you need my help 3 months from now? Now you want to come talk to me? So whatever your town you think is silent right now, and you think you might want to be there a year and a half from now or 2 years, start putting in the groundwork now. Start building that good, solid relationship.
All right, thank you guys so much. Let's give them a round of applause. They were fantastic. All right, make sure to give a visit to all of our awesome sponsors on your way out. We are also continuing the networking after party. We're going to be here till 10, so don't stop. Network, just like David said. Thank you guys so much for attending. Talk to you soon.